MicroStrategy becomes the most valuable organization from an equity perspective in the entire world, because they will become like the central bank of Bitcoin in the future. There's a group of children that exist in the world today that are around that time frame that have only ever been alive since Bitcoin has been around. If you believe in artificial intelligence is going to be successful long term, you inherently need to understand that Bitcoin will be as well. These bots are going to have to get paid somehow, and they can't set up a bank account at Bank of America. Bitcoin price will decline. Some of these companies may have to start selling their Bitcoin to buy their shares back to balance out the NAV of the company. The more Bitcoin we can actually acquire, the bigger geopolitical advantage we have in the future.
They've lowered their transaction fees by 50%.
That's remarkable.
How are you looking forward to that?
I still believe that
All right, Brian, so what is the single biggest fundamental shift that an investor has getting their head around Bitcoin?
I think the biggest change that people haven't figured out yet, especially a lot of traditional investors and asset managers, is the difference between the value accretion at the protocol versus the application layer. And that's flipped with blockchain technology. So to give you an example, in the early days of the internet, nobody could invest in IP, like Internet Protocol or TCP IP, right? Like that was the open source infrastructure layer for the internet. But if they wanted to invest in it, they built on the application layer. So your Facebooks, your Googles, your Yahoos. So if you wanted to invest in email, you couldn't invest in SMTP, Simple Mail Transfer Protocol, the email protocol itself, but you could invest in a company building an application that provided email to the markets, right? And so since the internet up until just recently, most of the value accretion happened at that application layer, but the software protocol layer couldn't accrete any value relative to having an asset that you could hold as an individual or retail. What's flipped with Bitcoin is now all the value accretion is happening at the software protocol layer. So basically buying Bitcoin, buying that chunk of the Bitcoin protocol is significantly outperforming the businesses that operate at the application layer. And a great example is if you think about investing in Coinbase in 2013 versus buying Bitcoin in 2013 and the value appreciation over that time period to now, Bitcoin significantly outperformed Coinbase, even though Coinbase has done very, very well. And I think that's the big shift people need to wrap their heads around.
But is that something that changes through as this system matures and the protocol and the applications mature? So you mentioned Coinbase, but over the last since Coinbase went public, has it outperformed Bitcoin?
No, I believe Bitcoin still outperformed Bitcoin over that time period.
Okay.
Yeah. Mm-hmm.
Okay. Well, your fund, Off the Chain Capital, which thank you for dinner last night.
Yeah, of course.
So your fund though is investing into companies that are building on and around the Bitcoin ecosystem in hopes that they're going to outperform Bitcoin.
Yeah, so we do a mixture of private companies and then also liquid assets in our portfolio. Okay. So our core goal is we try to outperform Bitcoin after fees, and we take a Warren Buffett, Benjamin Graham, deep discount value approach, and we're just applying it to this new technology sector.
Right.
And that strategy has fortunately allowed us to outperform Bitcoin 6 of the last 8 years after fees.
Right.
And so on the private company side, we're looking for very mature businesses that are cash flow positive, minimum to no debt, and that we think are on a 1 to 3 year pathway to liquidity. And what we do is we find early investors or employees that are looking for liquidity and become forced or motivated sellers, and we'll go in and offer them that liquidity at a large discount to where we believe that asset's intrinsically valued. And so we have a portion of the portfolio in private companies where we do those kinds of things. And then on the liquid side, we look for unique ways to actually buy digital assets at a discount or things that we think are intrinsically discounted.
Yeah.
A great example of that is the Mt. Gox bankruptcy.
Right.
So in the early days of the Mt. Gox trade, we originated the way to buy those Bitcoin bankruptcy claims with our team. And what was interesting about that particular trade is in Japanese bankruptcy law, when a bankruptcy concludes, they pay out the liquid asset, versus in US bankruptcy law, they pay out the asset's cash value striked at the point of the bankruptcy filing. Oh. So not only were we getting a discount on the claim value, we were getting Bitcoin's future performance.
Okay.
And so that's an example of something else we've deployed to help us outperform over time.
Yeah. But if we go back to the example of the protocol versus the application layer, right? So to your point, you couldn't invest into the protocols of the internet, SMTP, TCP. So the value accrued on the application layer, the Facebook, the Google, et cetera. And now Bitcoin gives us an opportunity to invest into the base protocol layer. We can buy Bitcoin today. And certainly to your point, it's been outperforming all the applications. But I guess the point that I was trying to ask is, do you think that as this evolves, that starts to flip? So certainly the base protocol, Bitcoin, will continue to build value. But we'll start to see applications being built on top of it that eventually maybe down the road are growing faster than Bitcoin?
Like, do you mean like layer 2 type applications on top of Bitcoin?
Yeah, or businesses that are built. I mean, I would consider like other businesses that are built on top of the Bitcoin system, an application of that potentially.
I think that's possible in time. An interesting way to think about it is that it took about the first 15 to 16 years, I would say, with the internet to build the infrastructure protocol layer before the application layer really started evolving and getting adoption with user-friendly applications on top of the internet. And we're kind of that same time span into Bitcoin now.
Right.
So I wouldn't be surprised if in the years to come, we'll see interesting applications built on top of Bitcoin. I still believe that our thesis around the applications that are built that are still more software enabled as opposed to a company, I think will still outperform over time.
Okay.
And why I think that is because the value of a digital asset has exponential growth capabilities compared to the equity of a company. Because an equity of a company, Bitcoin can sometimes trade up, 20, 30% or more in a couple weeks, whereas the equity value of a company is generally never going to move that quick. Yeah, so it'll catch up, and it's going to create a drag in performance with that. And so if you can balance that correctly, I think you can make money in both areas, right? If you can get deep enough discounts on certain assets, once that volatility smooths out from the private equity catching up with liquid parts of someone's portfolio, they can work well together in tandem. But I do think the liquid assets, just by the very nature of how quickly they can move from their performance appreciation, will probably continue to outperform over time.
Yeah. And, I looked at like the early days of the internet, and in 1997, 98, 99, you were like trading these things called like internet stocks. And today there's just no such thing as internet stocks. They're just companies, right?
Yeah.
And so, maybe there's this future like that. And I think of like Bitcoin sort of like as it's a commodity, right? It's an asset. Like oil is a commodity or an asset. And over the last 50 years, oil's been in a $60, $70 range, plus or minus. But then we have the oil industry. That's the 8th largest industry in the world, right? It's $4.8 trillion. So I sort of look at it as like, of course, Bitcoin will continue to appreciate, but then what about the industry that gets built around that? How would you view that?
I think that it's going to grow significantly over time. So if we look at Bitcoin as the base layer and the new types of applications being built on top, and some of these applications are like the difference between software and equity. So the Lightning Network is an example, right? That's a software-enabled application built on top of Bitcoin, whereas a company that offers like a wallet is an example that integrates with the Lightning Network would be more of the equity structure that's interfacing with that. But I think as these new layers get built on top, one of the theses that I've had for many years, it'll be interesting to see how this plays out, is many, many years into the future, are we going to have all these different blockchains, so Bitcoin and other digital assets that serve different use cases, or just like IP in the early days of the internet, will that collapse on top of Bitcoin? Will the whole digital asset universe collapse on top of the Bitcoin protocol because the applications on top get so much more efficient as technology advances over time? It's too early for us to know that, but if we use the internet as a lesson from history, that's what happened with IP.
Yeah. Yeah, I mean, I also understand that, and my thesis is it does all collapse, and I think we're already starting to see that. Right? And so through the different layers that we have right now, we can do pretty much all of the, if you want to call it utility from other layers, or other base layers coming over, even to the point of Charles Hoskin from Cardano saying he wants to put it on top of Bitcoin layer 2. Yeah. Smart contracts on layer 2, privacy on layer 2, all of that. I would say it's sort of like, if you think about just from like a philosophical level, like a business level, like a business's goal should be to remove as much friction as possible. And so it's like, and then you have network effects. And so it's like trying to manage different blockchains and different tokens. It just doesn't really make sense. Like Bitcoin makes sense to me because it's like we could have one global, recognized, borderless, type of asset. So it'll be interesting to see how that shapes up. I mean, don't you think we're starting to see that, or no? It's too early?
No, I think we're starting to see it. I'll be interested to see how it shakes out over time. I think it's too early to say everything's going to collapse. Because some of these new protocols are using Bitcoin for certain things, but not for everything. So a great example is there's a new protocol called Hemi that is basically taking the speed of the transaction of Ethereum and some of the things Ethereum does, but they're anchoring it into the security network of Bitcoin. So basically they're taking, what Bitcoin is so brilliant on is it's the most secure protocol ever invented, but they're using some of these other protocols to create a connective tissue between the two. So what I'm trying to figure out over time is, are we going to see more of that where maybe the most valuable parts of Bitcoin get connected through this tissue to these other blockchains? Or as Bitcoin becomes more advanced over time, will it collapse on top of it? I think today it's a little too early to give a definitive answer, but I do think I think it's possible that could happen over time.
Yeah, and we are starting to see a lot more side chains and things like that. There's like the whole ARC ecosystem that's like developing on top of that. So yeah, it's interesting. What do you think are the most interesting things? What are you most focused on in the sort of like this Bitcoin opportunity space right now?
So I think right now there's a huge hype around these Bitcoin Treasury type opportunities. And I think it's very interesting. I think that we've participated in some of these, and I look at it in kind of two ways. I think these Treasury companies will have great opportunity, especially the ones that hit the markets early in the short to near term with them. I do think if we start to see a drawdown with Bitcoin, like we've seen many, many times historically through these cycles, there's going to reach a point where there'll be too many of these market entrants that'll be in there, and it will create a washout phase or a shakeout phase. Because as the Bitcoin price will decline, some of these companies may have to start selling their Bitcoin to buy their shares back to balance out the NAV of the company. And that could actually create an accelerated drawdown in the space. If you have a 10-year vision for this, I think it's going to be very successful over time. I think some of these companies will become some of the most valuable businesses in the world. My thesis is that long-term MicroStrategy becomes the most valuable organization from an equity perspective in the entire world, because they will become, like, in my opinion, the central bank of Bitcoin in the future. And the other ones around the world that are smaller versions of this become like central bank derivative branches in a sense, but Bitcoin denominated. And I think that over time that happens, that they have this washout phase, and then they'll bounce back from that, right? But short term, that could create an accelerated drawdown. But in the near term, as these companies are coming online and doing this strategy, there's a lot of opportunity there.
Yeah. So when you talk about the drawdown, you're talking about the sort of 4-year cycle volatility of Bitcoin.
If that continues, yeah.
Yeah. Okay. So let's talk about that. If it continues, is what you said. So last cycle, Michael Saylor said all your models are broken, and I started thinking, man, these institutions are buying it. They're putting it in deep cold storage. They're not really trading around it, although they were. And then we had the drawdown again. So you said if it happens. So how do you think about that? How are you looking forward to that?
So I want to make sure I'm understanding correctly. If what particularly happens?
You said if another drawdown happens.
Oh, got it. Okay.
Yeah,
so when
you said if, right? So not like there's like a certainty. It's not for sure it's going to happen, even though it's happened, multiple times in the past. But
sure.
Are you thinking that there's a chance, a probability that maybe it doesn't, or it's muted?
I think it's muted or dampened compared to what we've seen historically. And the big reason I think that is because there's so many new avenues that have occurred, like you noted before, to remove friction. Like a good business removes friction and on-ramps to an ecosystem. And with the Bitcoin ETFs, that was the first huge friction remover we've seen for most people that don't trust a crypto exchange, like that demographic of people around the world, to now enter the Bitcoin market by being able to do it in a traditional brokerage in a fashion they're used to, right? And so that created a way for people to basically get exposure where they didn't have to think about it. They could just go in and click. Because of that, because of the institutional adoption, evolution, and compliance around the space as well, we're seeing tremendous capital inflows from parties that really never had exposure to it before. And so a lot of these investors, in my opinion, especially at the institutional level, they're not short-term traders. A lot of them have long-term oriented views with this, especially when we start thinking about what country governments could do in time. Like they're thinking about multi-generational strategic asset holds. And so even if there is a drawdown, because all markets go through cycles, every market in history has always gone through some kind of cycle. I think the drawdowns in the future aren't going to be 70 to 90% like we've seen before, but maybe the drawdowns fall somewhere between 25 to 40% or something like that.
Yeah. So basically you're talking about the volatility is decreasing. So does that mean the upside potential also gets muted?
So over time it will, but I think we still have quite a few years before we're going to see that get muted so much. And that's the very nature of Bitcoin being a scarce finite asset, right? Like the more money that flows in, I think it'll just exponentially grow over time. So I think we have a ways to go, probably like another at least 5 to 7 years before we see like that tremendous adoption that's going to be happening over this time period from a growth perspective. And then I think we could probably see a little more dampened growth on it. But I think that for the foreseeable future, it's going to be really, really valuable.
So if I'm understanding you correctly, you're saying that the upside volatility isn't dampened very much until maybe 5 to 7 years later, but the downside volatility is dampened. So does that make it a better risk-adjusted entry today than we saw in the past? It's possible. I mean, we've got now, 16 years of data on Bitcoin, and what we've seen is when you add Bitcoin as part of a diversified portfolio from the traditional 60% stocks, 40% bonds split, even 2%
into Bitcoin, 2% out of stocks, and you transition that into the Bitcoin, actually enhances your Sharpe ratio, your risk-adjusted returns, while lowering the overall volatility of the portfolio. So that's the data we have over the last 16 years. So like you noted, I think it's possible that can continue to enhance the portfolio as this non-correlated asset, which fiduciaries, when you understand what Bitcoin is, this is actually one of the things that I think is very interesting today. There's so many institutional asset managers that have a fiduciary duty to their clients to find non-correlated assets that can enhance risk-adjusted returns. And so many people still haven't bought Bitcoin. And it's like we have enough data now to figure this out where you're almost violating, or infringing on your fiduciary duty to your clients by not getting them exposure to this. Because the data is clear.
Just, I think it was just this week we saw Charles Schwab make a big announcement that they're getting into Bitcoin. They actually, I heard about this a couple of weeks ago because my sister-in-law is the vice president over at Charles Schwab.
Oh, nice.
And we have a lot of fun at family get-togethers for sure, because I don't believe in that traditional financial advisor model. We don't actually talk about it too much, but she's told me for years that even if a client that she's advising comes to her and asks her about Bitcoin, she's not even allowed to discuss it.
Yeah, it's common across several different asset managers like that.
So back to the fiduciary duty, it's like, even if I'm asking you, you're advising me on my portfolio and, hey, do you think I should include this? It's like, I can't talk about that. And what a big gap. Now, they just had a big meeting, I think it was 2 weeks ago, 3 weeks ago, and they announced, okay, we're gonna start allowing our clients to do this. And now I posted about this on Twitter, and I got a lot of people commenting, I'm with Schwab now. They're talking with me about it.
Okay.
Vanguard seems to be maybe the last holdout there. We'll see what happens there. But if we still have a lot of the upside left, the downside's been dampened, and it's a little bit of a better asymmetric opportunity.
I would think so. I think over time it's just pretty clear economics, right? Like if you have something that you can't create more of, and we know the predictable issuance schedule over time and the adoption growth curve, only thing that can change is price.
I look at it from like the cycles and the different phases that we go through. And so phase one was like this retail eruption. And so we had the retail money coming in, which was big, and it got the market up there. But at the same time, the risk was so high because when I started buying Bitcoin, it was 2015, but what is it? And what is it going to do? And then you had all the competition, like which layer one is going to win out. And now most of that's been sort of settled a little bit. And then you have now the institutions, and they're bringing in hundreds of billions of dollars. And so we have sort of the risk removed, as in the government's not going to make it illegal. Right? The U.S. adopted it. That's a big one. It's not going to be illegal. It's pretty much won the store value race. And now we have hundreds of billions of dollars coming in at the same time. So I look at it as a much better risk-adjusted entry right now.
One thing that's important too, I think that you just noted about the government not making it illegal or taking it over. There's a very important court case that happened back in the day, but in 2013, when Bitcoin went from a couple $100 up to I think around $1,200 to $1,400 and crashed back down, the U.S. government actually had congressional hearings, and they were considering banning Bitcoin. But what they discovered was there was this, I think it was an appellate case that went up, and I forget exactly which jurisdiction it was in, but there was a university professor named Bernstein who created open source cryptography software for some mathematical algorithms that he wanted to publish to the public, that the government said, no, you can't publish because this open source cryptography needs to be approved for military arms dealing with the US government. And this university professor said, that's not fair. This has nothing to do with arms dealing or rocket launch systems and things of that nature. I should be able to publish this in an open source community to show the world this work and this algorithm and things I figured out. So he sued the US government. So the name of the case is Bernstein versus the Department of Justice. The courts ultimately determined that open source cryptography software is considered language and protected under the First Amendment with freedom of speech. And so when they looked at that, they said, well, one, we have court precedent on this. We can't actually ban Bitcoin. So we all know they slowed it down. They did some things to try to slow down the adoption, but they couldn't ban it. I think the other thought too is, how can we really ban it? How can you ban open source cryptography software that you're going to shut off the telecommunications grid or the energy grid? It's just not reasonable, right? But that's a very interesting court case that kind of set some precedent many years ago for open source cryptography software, which is exactly what Bitcoin is.
Yeah, it's a good point to bring up. And to your point, they've done things to slow it down. I remember in 2017, Bitcoin ran from like 1,000 to 20,000 that year, and then in a coordinated fashion in December of 2017, you had Facebook and Google shut down all advertising around it. Most of the banks blocked you from sending money over to crypto exchanges. Credit cards blocked you from making purchases on your credit card. And so if you think about markets stopped going up when there's no more buyers. And so as it was going higher and higher, and it's sucking in more and more buyers. There was less buyers available, but then they shut the door. Right, and so to your point now, when you look at the market cycle, the structure of the market, I would say, to your point, the ETFs, and now these companies being included in the indexes, and now financial advisors bringing it on board. So like instead of blocking the exits like they did in 2017, it's like, or I guess they blocked the entrance. Now they've just opened up the doors.
And from a friction standpoint too, I think between now and 2030, we're going to go through a remarkable span of adoption because of the amount of friction that's going to be relieved. And I noted before that it took about 16 years to build this infrastructure layer for Bitcoin. And now we're reaching this mass adoption phase, I think, from ease of applications for these unique user experiences that will be developed. An interesting data point is that most children around the age of 16 is when they become interested in computer science. Okay. Now, there's a group of children that exist in the world today that are around that time frame that have only ever been alive since Bitcoin has been around, right? And they're reaching age 16, and if these people follow statistics and they start to become interested in computer science, this could be the generation of children that build the very, very interesting killer apps for Bitcoin that removes this friction to allow the world to just adopt this asset and technology en masse.
Yeah, it's certainly a generational thing. It's like my grandparents wouldn't buy Bitcoin, but my grandkids or my kids wouldn't buy gold, kind of a thing. And I know even with my kids, they're older now, but I remember my daughter, she just thought everything was a touchscreen. She'd go to every screen and just start touching. It's like, that's not a touchscreen, but they just think that, right? It's like it's native for them. Now, I know you've been doing a lot of trips over to the Middle East. And when you think about the Middle East, I was over there in Abu Dhabi in December, and it broke a lot of preconceived notions that I had, right? I hadn't been there before. And when you think about the Middle East, you might think of old money, right? Oil, right? Things like that. But they're pretty interested in this. Tell us what's going on over in the Middle East. I think Saudi Arabia, UAE, things like that.
Yeah, of course. So if we look at the UAE, they were probably the earliest in the world to develop solid, understandable crypto regulations. I think it was around 2018 timeframe. They just laid out the rules and said everything's a digital commodity. Okay. So there was complete clarity on what regulatory infrastructure was in for digital asset entrepreneurs that wanted to build. So there's a ton of people that moved to the UAE for that reason. So they're very advanced there. I believe the sovereign wealth funds, like one of their top holdings is the Bitcoin ETFs. They also have big exposure to Coinbase and some of the asset managers that are publicly traded in the crypto space. And I think they're very forward thinking in regards to that. And they're making huge investments in technology. And actually, President Trump was just over there recently on a tour, and they were talking about a lot of the investments they're making in digital assets and artificial intelligence to grow the economy over time. And then when you look at places like Saudi Arabia, whenever the Crown Prince MBS came and took over power, he really, in my opinion, started this cultural renaissance in Saudi Arabia because they were very traditional for many, many years. And I think he stepped in and he probably looked at other things that were going on around the world, and even UAE that was attracting tremendous amount of tourists and opportunities from a technology standpoint. And they started to lay out this Vision 2030 for Saudi Arabia. And that has huge investments in technology and clean energy and infrastructure and artificial intelligence and a variety of different things in these new projects that they're building in the region. I think long-term to grow the region, attract more types of opportunities and tourism to the region for very unique things that they're building. But technology is at the forefront of it. And I think long-term part of the goal is they want to become less dependent on the remaining oil reserves that they have, which has been such a tremendous income generator for the region over time. And I think one of those ways to go about it is thinking, how do they integrate in the future of technology, which is Bitcoin and digital assets, these kinds of things.
Yeah. I saw Trump's announcement of that. Is there some joint, I think, cooperation with the United States to build out, is it some AI tech data centers or something like that?
Yeah, and in the UAE specifically, there's a tremendous amount of large-scale Bitcoin mining operations that are going on over there, and the government's making a tremendous investment in that space.
Yeah. What are you seeing in regards to sort of maybe the convergence of Bitcoin and AI and how those things are working together?
So long-term, I always tell people that are hesitant or concerning of crypto and Bitcoin that you need to understand that if you believe in artificial intelligence is going to be successful long-term, you inherently need to understand that Bitcoin will be as well. And the reason I say that is because all these agents and these people doing, or these technology algorithms doing virtual labor and work, there's an energy expense to that from the computing power that's necessary whenever we're querying Grok or ChatGPT and things like that. So there's going to be a whole economy of these virtual agents creating virtual labor to service us and service themselves as well. I think there'll be a whole economy of even these bots that are doing things for themselves in this virtual economy. Because there is an energy expenditure for that and it creates computing cost, these bots are going to have to get paid somehow. And they can't set up a bank account at Bank of America, right, or a traditional financial institution. So they will get paid in like Bitcoin or an asset like Bitcoin, right? Because it's the most internet native way to exchange value. And so I think long term, if you believe AI is going to be exponentially revolutionary to our world, which I think most people that see it do believe that and understand that it's going to grow very quickly, you inherently need to believe in Bitcoin as well.
Yeah. Do you think that the AI revolution is going to take everybody's jobs, is going to depress the economy, and then kind of hurt the long-term trajectory of these financial assets, or do you think it's going to be add to it?
I think it'll be a combination of both. I think there'll be some jobs that'll get replaced completely by AI. I think there'll be other jobs that will allow a individual or a company to do things significantly more efficient and then be able to reallocate their labor in other areas. And I'll give you a great example. So I have a family member of mine who runs a law firm. And in the law firm, he was able to structure ChatGPT queries so that they could provide information into it to help them develop reports and things that they needed significantly faster than the manual way they were doing it before.
Right.
And what that allowed him to do was actually expand the caseload that each of the paralegals could take on in the firm. So it didn't replace the paralegals, right? But it made them 10x more efficient than what they were before. Yeah. So I'm hopeful that that'll be a likely outcome where you still have this integration into the traditional economy, but it's making people much more productive.
Yeah. Yeah, that's the way I see it too, and that's exactly what I was thinking as well. Everyone's like, "Oh, they're going to fire everybody." It's like, why would they fire everybody? Like, why wouldn't they just want to be more productive, more efficient, and make more money, right?
Yeah,
which seems to make sense. What about with the Bitcoin mining and sort of like the AI data centers? I don't know, is that an area that you guys invest in or follow?
We've looked at it before. So a big allocation that we had historically was in a group called Core Scientific, which was the largest Bitcoin miner in North America. And one of the things that we found interesting about them as we were doing our due diligence is Core Scientific, I think, was coming out of bankruptcy from the 2022 events that occurred. And when we were doing our diligence on it, what we discovered is about 75% of their mining infrastructure could be redirected towards AI computing. And the profitability on the AI computing contracts was probably 5 to 7x what the Bitcoin mining profitability was. And it didn't mean they were going to shut down the Bitcoin mining. It just mean this was an expansion of their revenue models. And when we discovered that, that was something we're like, okay, this is very interesting. It has a lot of opportunity here. So we ended up investing in that business. And then they started launching these AI contracts. And that created tremendous opportunity for performance for that company. Yeah. And I think that's something that's going to be akin to a lot of these Bitcoin miners. Yeah. The thing is that the Bitcoin mining companies, as they get into that space, most Bitcoin miners, from my understanding, have built out their infrastructure specific to Bitcoin mining. And a lot of the AI computing requires different kinds of hardware than what you need for Bitcoin mining. And so they will have to have large CapEx expenses to build that out. But over time, I think it's totally makes sense for their business model because they're already doing it. They're already hosting these data centers for Bitcoin mining. You might as well expand in that area as well.
Yeah. Okay. Now, for Bitcoiners that are, hopefully most Bitcoiners are here for the freedom aspects of Bitcoin, but a lot of us also like the number go up part of Bitcoin as well. So for people that are thinking about allocating towards Bitcoin to get their number to go up, to protect their savings from inflation, things like that, how do you think about allocating to Bitcoin versus maybe some of these Bitcoin Treasury plays, public plays, Bitcoin miners, or funds like off-the-chain capital?
Yeah, so if you're an individual investor that is probably not going to have direct access to a lot of these Bitcoin Treasury opportunities in the early stages when they're getting the investments to go public and then do that, I think it's probably better just to buy Bitcoin. However, that being said, some of them will do very, very well, right? Like we saw MicroStrategy have tremendous performance since 2020 and they adopted the standard and they've outperformed Bitcoin over that time frame. So I think that I'm a big believer is I don't like market timing. If I invest in something, like Warren Buffett says, I wouldn't hold something for 10 minutes that I wouldn't hold for 10 years, right? Like I'm a very long-term oriented thinker. And so from that perspective, I actually think you could be looking at allocating to both, right? Because the Bitcoin Treasury companies have the potential during certain market cycles to outperform Bitcoin. Right. And then if you have Bitcoin directly too, like if there's time periods where they underperform, you still have that as part of your portfolio as well. Because they're both getting exposed to the same space. But long-term, if you think about it from a 5-year, 10-year perspective, and you have the mindset that it's possible that these Bitcoin treasury companies can become these Bitcoin denominated central banks of the future, you're talking about some of the most valuable organizations in the world, in my opinion. And so I would look at both.
Okay. And then where does a fund fit in on top of that?
So from a fund perspective, if it's an institution, if you're finding the opportunities for these Bitcoin treasury plays in the early components where people are doing these pipe investment transactions, usually you can get exposure at very favorable entry points.
Yeah.
And then once those companies ultimately do their reverse merger or whatever their public offering is, as long as the markets are interested in that and they allocate to it, there's a lot of opportunity there as well.
Yeah. But from an individual investor standpoint, is it something like get your Bitcoin first?
Absolutely.
And depending on how big your portfolio is, then you might want to take a small percentage of that, move it into some treasury companies. And if your portfolio is even big enough, then maybe even a small percentage goes into some funds. And so those are sort of like different risk levels, different duration levels that hopefully have different return profiles.
So what I always recommend, and this is both for institutional investors that don't have crypto exposure and individual investors, I always say you should look at 3 parts of your investment strategy. One is Bitcoin direct. That should be the biggest portion of your exposure to the space. And then you should also have a smaller percentage of your exposure for venture type opportunities. Like what are the new things happening on top of Bitcoin? Like what are these new application layers or things that are being built?
Right.
And that should be, like any venture portfolio, maybe that's 5 to 10% of the exposure you have to the space. And then the third one I tell people to consider is what we do with off the chain, because it's very different. It's this Warren Buffett value strategy. But with that, the biggest part of the portfolio for anybody, in my opinion, should be Bitcoin.
Start there first and then lever up from there.
And on the treasury companies too, the reason it's interesting, I think, to find an asset manager who's very experienced to do that component is most people are going to have a very challenging time trying to figure out which one do I invest in, right? Like which one has a lot of potential. And most people won't even understand the differences behind the scenes of what some of these Bitcoin treasury companies are doing that makes one different from another. And if you can't figure that out, in my opinion, it's better for you to find an asset manager that's allocating to those types of strategies, because they're the ones with the boots on the ground doing the diligence, figuring that out. And then you just put your other exposure in Bitcoin.
Yeah. Is that because there's all new terminology and all new metrics to measure them that people aren't used to?
There's new terminology, there's new metrics, and a lot of these companies too, they're not all doing the same thing, right? Like some of them are issuing equity or debt to acquire more Bitcoin per share. Some of them are taking other components where they're going into a certain industry segment and they're buying discounted cash off a publicly traded balance sheet, which then allows them to get more Bitcoin per share when they issue their equity. And so there's a lot of nuances to it. And so if you don't fully understand the differences between each one, you could maybe invest in one that doesn't perform as good as another one could.
Yeah. Especially when it's very frothy right now.
Yes.
And then to your point, if a market cycle turns down, then like who gets left holding the bag? All right, let's wrap this up. What would you say is maybe the thing that you're most looking forward to over the next 5 years developing?
I think the thing I'm most excited about is we're finally reaching a point after many, many years in the space where governments are opening their eyes after being so resistant for so many years.
Yeah.
And I truly believe the first government that prints to buy Bitcoin wins in mass, right? Like the first government that understands that the more Bitcoin we can actually acquire, the bigger geopolitical advantage we have in the future. And I think the United States government is waking up to that relatively quickly.
Right.
And so I think that's a very interesting thing, because that, in my opinion, is a major step towards potentially backing our currency by Bitcoin long-term, or having Bitcoin being the global currency, which I think long-term is the real value, because Satoshi's original vision was a peer-to-peer cash electronic system, right? And we've gotten so ingrained with how Bitcoin has transitioned over time and evolved as an asset that we don't want to forget that one of the most valuable things about Bitcoin is transacting value between two parties peer-to-peer with no central party intermediary. I mean, it's a brilliant thing that never existed before, right? And I think long-term we'll get back to that. And I think that that's a major step for governments to have that trust and belief in it, where we can start backing some of the dollar by Bitcoin, and then maybe eventually it's only Bitcoin.
Yeah. So the government adoption, the sovereign adoption. Yeah. It's sort of like the nuclear or arms race, or like the space race, and like which nation's going to acquire it first. I agree with you on the medium exchange front. And it's interesting, I think about this monetary evolution, and it's like we haven't quite got to the medium of exchange phase yet, but in some instances it makes sense. And this morning, I opened up the show here at the Bitcoin conference was I think it was the president or CEO of Steak and Shake, which is like another franchise that just started accepting Bitcoin. And he was talking about how just since they've started accepting Bitcoin at the locations, they've lowered their transaction fees by 50%.
That's remarkable. That's a no-brainer for companies.
I mean, 50% to the bottom line? Like, okay, sign me up. Like, who's not going to do that, right?
Sure.
Because they're paying whatever 3-4% on, whatever 2-3% on transactions, and now they get it for like a point or whatever, right? So, okay, cool. Well, I think anything else that we should be paying attention to that you want to shout out?
I think those are the main core topics we covered. Cool. Yeah, I appreciate you having me on.
All right, thanks.
All right, thanks, man.